And the LBMA, zoom, their inventory is dropping. Now we're T plus 8 weeks. Sorry, we're not the T plus 1 day that we told you we are. And now you're seeing record imports into the United States. Record, month over month over month. Huge amounts. There are 8 banks, 8 Western commercial banks, 8, that hold the largest concentrated short position of any commodity ever traded in the history of the COMEX market in silver. This tiny little market, you have 8 banks that are massively short. And the LBMA, they're trading 3.5 times the annual global mine supply every single day, 10 times the availability of the silver that they have backing those contracts. All of this stuff. Now ask yourself, why? Why would 10 Western banks, 8 Western banks, hold a short position as extremely large as it is, and almost all of it naked, meaning it's not backed by anything?
8 major traders, believed to be primarily Western bullion banks, hold the vast majority of COMEX silver short positions, with the combined net short among the 8 Big 8 totaling around 400 million ounces as of mid-2025. This level of concentration is extraordinary, comparable to over 200 days of global silver production. Experts like Ted Butler argue that such concentrated positions cannot result from free market diversity and are strong evidence of price manipulation. Meanwhile, LBMA inventories are dropping sharply. Analysts warn that if physical demand increases, for example, delivery demands, or ETFs continue accumulating, these heavyweight short positions may force banks to cover at lofty prices, potentially triggering an epic silver rally. President and owner of Miles Franklin, Andy Schectman, highlights that silver is arguably the most undervalued asset on the planet. Strong industrial demand has supported the silver market and has been a major driving force behind its significant supply deficit. However, the Macquarie Bank commodity team, led by Marcus Garvey, points out that investment interest has now taken the lead. The team stated in a report released at the end of last month, "As we argued in March, in a healthy physical supply-demand context, the return of stronger financial bids, including those from derivative positions, has retained the space for silver to display significant performance over some time, and we believe this is what has driven up the price." As China ramps up efforts to de-dollarize and secure its financial future, its aggressive stockpiling of key resources, including silver, is causing global unease. This strategic move has significant implications for the precious metals market and global economic stability. China is rapidly accumulating vast reserves of crucial materials, including precious metals such as gold and silver. According to reports from the Week and Newsweek, these actions are taking place amidst soaring commodity prices and China's economic challenges, raising questions about the country's motivations. The most alarming aspect of China's stockpiling is its approach to silver. According to sources from Zero Hedge, China is buying unrefined silver concentrate from Latin American refiners and miners, effectively laying claim to Latin American silver before it is refined. This tactic allows China to secure silver at higher prices without directly affecting the spot market, crowding out Western buyers and raising concerns about future supply and price stability. Remember to hit the bell symbol and subscribe at the beginning of the video so you don't miss any updates. If you liked the article, please leave a comment below and give us a thumbs up.
Ultimately higher than anyone thinks possible. I think it's the most undervalued asset on the planet. The word that I think of is asymmetrical, low downside, high upside. I have been one of the few people who have either been too stupid or had the guts to say that I believe it's the military-industrial complex that has been suppressing the price of silver for a very long time. And I think they've gotten caught. Let me explain. Most of my career, no one ever stood for delivery. Never stood for delivery. Right now, we see the LBMA, the London Metals Exchange, which has watched its inventory. If anyone out there Googles silver stockpiles of LBMA, you'll get a graph. And it's like a ski hill. It's straight down to the lowest level of silver since they started keeping records in the 140-year exchange. It's being drained. Now, the LBMA is a T+1 settlement, meaning T for trade plus 1 settle. Third day your metal is moving. Well, they're telling us that it's T+8 weeks because they don't have enough in the way of trucks or manpower to move it. David Jensen, who does an amazing job on Substack, will tell you that they have a 190 million ounce float. They have 800 million ounces of silver there, of which 190 million are available to be delivered against the contracts. The other 500 plus million belong to the ETFs largely. But they trade 1.9 billion, excuse me, yes, 1.9 billion ounces per day is what they are in essence doing. The number that they really do is roughly 200 million ounces per day. That's what they post. But he goes on and shows proof, and it's been verified that they only post the final settlement numbers, that they're trading 10 times that amount to 1.92 billion ounces per day, 3.5 times the annual global mine supply, 10 times the float. So if everyone stands for delivery and you only have 1/10 the silver there, do you see a problem? Well, yeah, we're T plus 8 weeks now. Sorry, not the T plus 1 that we told you because we don't have enough in the way of trucks. So let me back that up. How does it all happen? 3 years ago, when I gave a speech at VRIC, where I always see you, Jay Martin's conference, and Jay is here, and it's the only other conference I always go to. Check it out. It's a good one in Charlotte's backyard in January in Vancouver. I said there's 500 ounces in the tip of a Tomahawk cruise missile. That's the research I came up with. And I don't know anyone saying that before that. A guy comes up to me in the audience and he says, I work for the Department of Defense. I almost fall over. He says, I have designed and helped develop cruise missiles, and I think there's some silver in it, but I think you're wrong on the number. Okay, sorry. He says, I'll get back to you. I don't hear from him. 2 years ago, he shows up with a stack of pictures. He says, you remember me? I helped develop the Tomahawk cruise missile. These are all declassified. And he showed me the pictures, and he said, you're right, I'll be damned. Between 13 and 14 kilograms of silver in the cone of almost every cruise missile you can think of. Hellfire, Tomahawk, Patriot, you name it. And all sorts of high-tech weaponry and aerospace and submarines, they all have. And now so the military needs all this silver for high-tech weaponry. It used to be calculated in the supply-demand numbers out of the Silver Institute. Not anymore. It vanished. We have a 250 or 60 million shortfall every year and no military applications in the supply-demand numbers. Okay, so even more interesting. And then you get to the point where you take a look at COMEX. There are 8 banks, 8 Western commercial banks, 8, that hold the largest concentrated short position of any commodity ever traded in the history of the COMEX market in silver. This tiny little market, you have 8 banks that are massively short. And the LBMA, they're trading 3.5 times the annual global mine supply every single day, 10 times the availability of the silver that they have backing those contracts. All of this stuff. Now ask yourself, why? Why would 10 Western banks, 8 Western banks, hold a short position as extremely large as it is and almost all of it naked, meaning it's not backed by anything? And the question is, in my mind, answered by the reality of the military-industrial complex. Think BlackRock. BlackRock is the custodian, along with J.P. Morgan, of the world's largest silver trust, SLV. You can naked short the hell out of SLV if you want. So let's just pretend I'm right for a moment. A company like BlackRock, who owns all of the military manufacturers, like Raytheon and all of the companies that make the weapons, well, they also are very deep into silver, whether it be PSLV or being a custodian of SLV and GLD. So they suppress the price of silver to make the high-tech weapons to create and sell all around the world to wage war. And then you see countries like the Ukraine get blown up with those weapons. Who then gets the reconstruction contract? Oh, yeah, it's BlackRock. My point to you is this. It's not that silver has underperformed or is counterintuitive in its nature. It's why are 8 banks holding it down the way that they are. Now, people would say, well, can that go on forever? No, it can't, because for the first time over the last 2 years, countries that are now coordinated, motivated, sophisticated, and wealthy, mostly the BRICS nations, are saying, okay, well, we'll stand for delivery. And the LBMA, zoom, their inventory is dropping. Now we're T plus 8 weeks. Sorry, we're not the T plus 1 day that we told you we are. And now you're seeing record imports into the United States. Record, month over month over month. Huge amounts. So the question is silver traded freely? No. Will it? Yes, I believe it is, because what is happening for the first time ever is that these banks in the West, who are stupid as a mud wall by doing this, are now being challenged by the rest of the world for delivery. So I would say silver offers potential that I've never seen in any asset I've ever owned or would ever think of buying with such low downside. And, I would say to those people, have strong fingertips, trust your gut. There isn't an asset with a better setup on the planet, not just for the fact that it's undervalued or it's being shorted, but the plurality in uses, monetary uses, digital uses, solar panel use, military use. All of these uses for silver in different areas makes it an asset that, and your folks in Canada are lobbying to move it from a industrial to a strategic metal. It is a strategic metal. And my favorite guy on Twitter, Eric Young, King Kong on Twitter, Yeung, I think it is, he says the Chinese are doing the same thing. They're shorting the price in the West to beat it, join them if you can't beat them, and buying it all around the world. China is the second largest producer in the world of silver, and they're flying all around Latin America. Go ask Sean Kunkun from Dolly Varden. He'll tell you they're flying all around Latin America, going right to the miners like Dolly Varden, saying, we will buy your doré and your concentrate and pay double what the West will. Doré being crudely refined bars and concentrate like a sludge, and they ship it back to China to refine it. Now, why would the second largest producer in the world of silver need to do that? And Sean says because it is strategic, they see the future, and they're trying to pickpocket every last ounce on every shelf across the globe. But if you short it first in New York, then you go all around the world and buy it where it's not reflective, where its acquisition doesn't reflect the price change. And in particular, going directly to the miners, where you're disintermediating the market altogether. So yeah, in my mind, Charlotte, it is the most undervalued asset of a generation. And I say that with 1,000% sincerity.
Andy criticizes current U.S. economic policy, arguing that tariffs are being used more like sanctions, aggressive moves that alienate other nations rather than protect domestic manufacturing. He believes the U.S. is accelerating global de-dollarization by acting coercively and irresponsibly, both diplomatically and fiscally. For more than 8 decades, the U.S. dollar has been the world's reserve currency, a position cemented at the Bretton Woods Conference in 1944 and reinforced by America's post-war industrial power and military dominance. Today, that supremacy is facing growing resistance from multiple directions, from African revolutionary movements to economic recalibrations in Europe, and from the counterbalance efforts of BRICS nations to the geopolitical entanglements of Ukraine and Israel. Massive government debt, infighting, and an inability to manage inflation or interest rates without triggering systemic collapse have eroded trust in the dollar. As a result, other nations are dumping U.S. treasuries, buying gold, and preparing for a shift away from dollar dominance. Andy claims that the U.S. government, especially under Trump, recognizes this impending crisis and may be preparing a gold-backed monetary reset. President Trump's renewed threat to impose tariffs of up to 30% on European Union and Mexican imports maintained a floor under precious metals prices. These geopolitical and trade tensions continue supporting gold and silver's defensive characteristics during periods of global economic stress. Now, let's recall the interview.
After 4 years of administration being too stupid to be stupid, this just puts stupid exclamation point. You should be extending the olive branch and finding ways to work cooperatively. Those are not tariffs. Those are sanctions. A tariff is something you put in place to protect your manufacturing. If I don't like what you're doing, Charlotte, and I say, you know what, if you keep doing it, I'm putting 110% tariff on anything you do. That's not a tariff. That is a sanction. I'm threatening you. I'm not putting a tariff on to equal or level the playing field. What he is doing is accelerating and reinforcing the mentality that these countries have to begin with to get together. That is of a country that not only is being coercive and being combative and being a bully, but this is a country who we shine a light upon all of the irresponsible spending, right? And Doge says we can get up to $2 trillion in savings, and they show Congress can't vote on it, they can't ratify anything, so they come to $80 billion in savings, right? That's a lot of money for you and me. That's 38 hours worth of spending in the U.S. government. So we're a government, they want to raise the debt ceiling to $5 trillion. There's going to be a $2.5 trillion deficit. There's tremendous infighting still between red and blue, and this coercion and our irresponsible spending, and on and on and on. We haven't learned. And so we've pissed off the world. And so in my opinion, it's the wrong thing to do. Now, let me say this. I'd vote for Trump again. I voted for him. I'm glad he's here. I think we'd be in a world of hurt if it were the other way around. However, his actions, the previous administration's actions were too dumb to be dumb. This is almost like he's trying to foster in a reset the way the previous administration did. Piss everyone off enough so that they dump treasures. Now, they're already doing it. They're already shedding treasuries. The Fed had to come in 2-3 weeks ago and buy $48 billion worth of treasuries, 3, 10, and 30 year. The Treasury had to come in 2 weeks in a row and buy $10 billion worth of longer maturity, 10, 20, 30-year treasuries because the demand is waning. So these countries are shedding treasuries and buying gold. But if that's ultimately, if you realize we're too far down the rabbit hole, that we've created such a mess with our indebtedness, with interest rates that we suppressed forever, that we can't fix the problem. If we try to tackle inflation with higher interest rates, we blow up the system. If we lower interest rates and inflation gets too high, we ultimately lead to a place where rates go higher again through inflation. And we're at that point where we're damned if we do and we're damned if we don't. And I will say the one difference between this administration and the previous is that this administration knows it, because we've become a net importer of gold since November. We've imported pretty damn well near $100 billion worth of gold since November, that we know of. Somewhere in the neighborhood of 15 billion worth of silver that we know of. We have become net importers. And then you get Trump on Easter Sunday saying, well, he who has the gold makes the rules, the golden art of negotiating. You have Bessent, the Treasury Secretary, who says, I want to preside over another Bretton Woods, a new monetary system. He's a self-proclaimed gold bug. And then you have Judy Shelton, who in my presentation, I play a 1-minute snippet, and she, in no uncertain terms, and she just said it again yesterday on Twitter, in no uncertain terms, she said to me, Andy, Trump told me when I was on his transition team, and for those who don't know Judy, she was his Federal Reserve nominee in 16 or 17, wasn't confirmed, but will probably be in that list of members who would take that position after Powell resigns or his tenure comes up. To run the Fed. She said, Andy, on July 4th, 2026, Trump is going to make a huge deal of it because this is the 250th anniversary of the country. And he told me this is a big deal for him. And he's going to issue gold-backed treasuries, 50-year in duration. And, later on we'll do shorter durations. But she said it on my video, and I play it for everyone in the audience, and she said it on Twitter again yesterday. Yes, I believe he will issue 50-year treasuries pegged by gold. Now, step back for a moment. I think someone said to him, if we don't do this, we're in big trouble. The rest of the world is accumulating gold and silver because the prices have been suppressed on COMEX and the LBMA for so long. They're gobbling it up, and if we don't do it, we're screwed. The amount of gold and silver coming into COMEX month over month over month over month, every single month seems to be record. The May contract just a month and a half ago was the largest delivery of both gold and silver in the history of the COMEX market. Who is buying all of this gold and silver? And most of it is leaving the COMEX. Where's it going? Who's taking it? And these are really big deals. So if you realize that goes hand in hand with the central bank buying, I think someone got Trump's ear and said, not only do we need the gold and silver, but mathematically we're in trouble. And we do need a reset. And I would argue we're in the midst of that reset right now. But how do you reset the system without falling on the sword? Well, you find a villain. And how do you find the villain? Well, you incentivize everyone, all those mean countries who are being so unfair with us. I want to address that for 1 minute. Are they really being unfair with us? Because Triffin's dilemma says if you are the world reserve currency, you will always have a trade imbalance, period. You cannot provide the world enough dollars just through trade that they all need. So you have to export dollars, which means the dollar is strong, which means other currencies are weak, which means your manufacturing is non-competitive. So you send your manufacturing over to China and to Vietnam and to other countries who make things for you at half the price. And it's those countries who have used our dollars and bought our treasuries that have kept goods cheap, interest rates low, and asset prices high. That's the benefit we get for being the world reserve currency, amongst others. And if we think that we can then put tariffs on everyone else because it's not fair, think about it. Is it fair? We expect them all to use our dollar and to buy our treasuries. So what I'm getting at is they understand we're too far down the road. We can't raise rates or we blow up the system. We can't lower rates and inflate or we blow up the system. How do we get out of this indebtedness? How do we handle all of this massive debt load? Another $2.5 trillion added on to it now. Yeah, there's $37 trillion. But what about the $175 trillion that isn't on the balance sheet? Medicare, Medicaid, Social Security, government, military, pensions, all of that stuff. How does that get paid for? So is he trying to get to a point where everyone says, screw it, dumps dollars, dumps treasuries, rates spike, stocks, bonds, real estate, the banks, the insurance companies are all inversely correlated to that? That's when you reset the system. You've brought back all of the gold. You peg a new system to gold, and you become more nationalistic rather than globalized. Now, I don't say that very often, but in my soul, I feel that is almost what he's trying to do. If not, his actions are too stupid to be stupid, because Vice President Vance talks about Triffin's dilemma. It's been written about on White House stationery. World reserve currency from the pound sterling after World War II. You put all these things together and you have to ask yourself, what is the right answer? I don't know. But what I will say to you is that gold is being, something very different is happening with gold globally. And I feel as though it's quietly being reintegrated into the monetary system. I really, honest to God, I do. It's wealth. And the biggest money in the world understands that, because you would not see the record month over month over month over month deliveries into the United States, let alone the record central bank buying for the last 4 years. So yeah, something big is happening, Charlotte, truthfully. Bigger than most of us, I think, understand, including myself.
With 8 Western banks holding concentrated short positions, declining LBMA inventories, increased industrial and investment demand, and aggressive Chinese stockpiling, silver is at the center of a high-stakes financial battle that could lead to a price explosion. According to Andy Schectman, silver is the most undervalued asset in the world and has unmatched potential, particularly as de-dollarization gains momentum and confidence in U.S. fiscal policy continues to decline. Silver's function as an industrial commodity and a monetary hedge is more critical than ever in light of the current geopolitical unrest and economic realignments. If silver is as systemically significant and undervalued as stated, what may cause the existing COMEX suppression regime to fall apart? Could China's covert silver hoarding outside the spot market alter the way prices are set globally and erode Western dominance of the precious metals markets? We would love to hear your opinions, so please leave a comment below. Please remember to subscribe for more material and give this video a thumbs up if you found it helpful.